Global economic collapse could be right around the corner as Deutsche Bank publicly reveals it is quickly rotting into oblivion. Many in the financial and political spectrum are suggesting the only way to prevent Deutsche Bank from a collapse is to prepare to bail it out. This is, of course, against the EU policies, but that hasn't stopped them before and may not stop them again. You came here for the truth, so let me unveil that for you. This is the biggest news right now. As you can see, a major bank is right here at the very edge, ready to collapse. You're not talking about some small bank that can be bailed out very easily. This is a little tricky. This is too big to fail. And we know exactly what happened last time, where they injected literally trillions of dollars into the system and still have not been able to maintain any growth. But surely you know that. German officials could be about to find themselves in an uncomfortable position, being called on to show that they're ready to rescue bailout a bank in part of the world where such operations are considered taboo. So they're not allowed to do this. But again, it's really a joke to say what they are or not allowed to do, because they do whatever they want. Deutsche Bank came under intensified market fire on Thursday, the latest salvo being a Bloomberg report. A small number of hedge funds are trimming their sales at the German bank, and everybody should definitely be selling off if they have any positions. In a broad perspective, the move would represent a minor dent in Deutsche's derivatives clearing business. And that's, a minor dent. There needs to be a major dent. Selling off of all of that garbage. There have been some outflows, sales. There have also been some inflows, which are said to be part of the typical ebbs and flows. Sure, they're trying to rest everyone assured. Don't worry, everything is fine. Relax. Here, have some low interest rates. Let's move on to the next article. Hedge funds have started to pull some of their business from Deutsche Bank, setting up a potential showdown with the German authorities over the future of the country's largest lender as the shares fell sharply. Need to remember that again. What we need to understand is, the stock is one thing, but also the actual total assets, total liabilities that company has. The stock is one component, and surely it's very important, but also need to look at the assets liabilities portion of that, the accounting. And right here, European regulators and government officials have kept a low profile in public over Deutsche's deepening woes. However, in private, they've stuck a sanguine tone, stressing that the extremists, there is a scope under European regulation to inject state funds to support the bank. Okay, now, as you can see, inject state funds to support the bank. What are they talking about? Well, specifically, that's called a bailout. Don't say that word, though. Say inject state funds to support the bank. And then, it's not so taboo. But of course, that isn't the case. It's the exact same thing. It's stealing money out of a bail-in, just grabbing it with your hand and stealing it. Or they do a bailout, which is stealing it from the taxpayers indirectly, over a certain period of time. All I will say is that it doesn't work. But of course, this is the way it is. You can just gamble on the derivatives, gamble on everything else, waste all that money, ruin it all, lose it all, and you'll always be bailed out. So why in the world wouldn't these companies do that? It's crazy. All right. And last but not least, the article out of the New York Times. In a market full of crowded trades, few have become as fashionable as to bet Deutsche Bank's stock price will keep on falling. This font is quite small here. I'll just try to be quick. Hedge funds, large and small, are shorting the stock. Long-term institutional investors are dumping their positions, Wall Street's secretive but influential community of independent research providers has been proclaiming for months that Germany's largest bank does not have enough cash to survive. That's clear. That's obvious. You don't need to be an independent research provider, getting paid for this type of thing, or working for the company, or being an analyst for a bank or anything. You just need to look at the situation that their stock was way up high and now it's way down low, and you should have already been out of there if you had any of your funds in this company at all. Not that you should be in the banking system anyway, but if your money is with that bank, your money is invested with them in any way, shape, or form, not just them, but they may have subsidiary companies. And let's not forget here, this just reminded me, MF Global. Look at how the counterparty risk and all the affected down the line. Sometimes I refer to this as the ripple effect. All right, very important to note. And then last but not least, since we're on this topic, I felt it important to note about cash. This article happens to be, the countries who save cash, the companies who don't, or countries, or the people in those countries. Who's saving, who's not saving. It's interesting to see. Why I mention it is because we're all going towards a cashless society to make all of these easier for the technocrats. They can steal money easier, they can be able to track everything easier, and that, of course, is one of the major goals. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to push these videos higher up into the YouTube search rankings. It brings them up and basically tells everybody, hey, this is a good video. If you found the video informative, I know you'll find my book, The Money GPS, even more informative. Head over to Amazon where they have a look inside feature. It's going to allow you to flip through the pages of the book to see if you like it. Take care.